Hello, you're welcome. Welcome to our channel, F.V.G channel. Presently, we are talking about forex. Um, we treated market structure the last two classes. We treated market structure in the last two classes. So, in this class, today we are going to treat reversal zones of the market, where the exact point market reject from, or you can call it the market interest point zones. The reversal reversal zone of the market, right? Or you can call it what? Market interest point zone. Market interest point zone. Okay, so this is what we'll be talking about. So there are various characteristics of our reversal zone. When we talk about reversal zone in the market, we are talking about the exact point where market will reverse from. Do you understand? So the various characteristics we have, or we're looking at three of them. We have our order block, we have fair value gap, which is known as F.V.G. Okay, we have our king order block. Okay, now in these our order blocks, we have our bullish order block and bearish order block. Okay, bullish order block and bearish order block. So an order block, let's look at our bullish order block. A bullish order block is the last red candle before the expansion. If you remember in our last class, we talked about what? Expansion, distribution, impulsive move, right? So uh, don't mind my drawing now. So our bullish order block is the last red candle. Let's say this small candle is what? Color red, right? This small candle is red. Then we'll have what? This is our green candle, this one. So the last red candle after this impulsive move that engulf this candle, this is an engulfing pattern, right? So after this one, the last red candle before the expansion is called our order block. So to mark our order block, you take it from the tip of the wick. Some people take it from the tip of the body. I prefer taking the whole wick. So the market will have to what? Go, come back, reject from here, and start reversing again. So this order block is part of a reversal what candle. And so this is what? This is a bullish order block. Why? Because it's the last red candle before what? The expansion. Before our expanding candles. Okay. But that of what? The bearish is what? The last green candle. Now I'm using red and green because red signify what? Uh, a bear, green signify a bull, right? So I'm actually using, you can actually put your chart to be different colors, right? But I'm just actually using red and green. So in case you hear red and green, know that that's what I'm saying, okay? So for a bearish order block, is the last what? Green candle before this expansion, right? Before this expansion, this red candle, okay? So you mark the tip and you mark the tip. So the last green candle before the expansion is called a bearish order block. Now I'll be showing us in the chart. I'll be showing us in the chart for us to actually learn more about it. Okay. So, but before we look at the chart, let's look at the characteristics of a bullish order block. Characteristics of bullish order block. Okay. So what are the characteristics? We have the first one is that it must take out liquidity. Okay. It must take out liquidity. The second one is that it must be an impulsive move away from the other block. Impulsive move away from what? The other block. Three, it must what? Break structure. So break in market structure, it must break structure. Four, it must what? Engulf. It must what? Engulf. So these are to be able to identify a good bullish order block. These are the characteristics you should look at. First is what? It must what? Take out liquidity. Secondly, the move away from the other block must be impulsive. Okay, impulsive meaning expansion like that, the same word. So it must have what? It must have an impulsive move away from the other block. The third one is that that impulsive move must be able to break the market structure. Okay. Then lastly, it must what? Engulf. Now, if you look at this candle example I gave, this is an engulfing pattern. So the candle actually what? Engulf this bullish order block. But here also, it also engulf this what? Bearish order block. Okay. So with this definition, let's try and look at the chart to be able to to be able to what? Identify what we just said. Okay. Now, so let's look at it. This is an example, right? Took out liquidity from these zones, took it out by this long wick here. It took out the liquidity, right? First criteria met, right? The last what? Green candle before this expansion. Okay, so this is like an example of a bearish order block, but really not a good one because of all this long wick. Okay, so it took out liquidity, this zone. It broke structure. This was the previous lower low. So if you check our market structure, high, right, low, lower high, lower low, okay, lower low here, lower high here, lower low here, then our, so it took out this liquidity up here, broke our market structure here. Okay, let me use line. You measure it, you see that what? It broke the structure here, right? Broke the structure. So how many criteria have been met? All, right? But it's not a perfect, this is not really a perfect engulf. You didn't really engulf this one. Okay, let me mark what, let me mark it. It's not a perfect example because of this long week. Okay, okay, so it's took out liquidity, broke structure. Now if you see the coming back to retest, it came back to that zone, right? You can see it. So market always reject or it reverse from what? These three zones that we said: order block, fair value gap, and king o order block. So now we are trying to look at an example of both our bullish and bearish order block. Okay, so this is a bearish order block. The green candle before the expansion, right? Let's see if we can get another example. Now another example is this: it took out the liquidity here, right? Raided the high here, this previous, the last high, raided it up, came and broke structure here. Okay, it broke the structure, right, by a week. Okay, the full, see this full body candle later closed below, right? Broke structure here, right? So now you can as well have more than one or two uh, other block, but we'll get to that as well. But the last green candle responsible for this impulsive move, right? And there's a little structure here too that it broke. Broke this little structure, tried to retrace, and came back to what? To break this main higher low. Okay, so you raided liquidity, broke structure, and the move is impulsive, right? And engulf this green candle, this very green before this bearish, this black candle, the last green before the impulsive move. Okay, let's let's see another example. Now look at another example. Raided this high, right? Raided the high, came, broke structure here. This zone broke the structure And now, but this candle is not really engulfing, right? Because of this long width, it's not really an engulfing candle, so we can't really use that. Okay, okay. But we can also still take a trade if we don't have 1 and 4. So the major characteristics, if we don't have 1 and 4, if we have only impulsive and break of structure, we can still take the trade. Okay, but for a good bearish and a bullish order block, you must have the 4, right? But you can have situations where you will not have 1 and 4. Okay, look at this situation now. It raided the high, right? Took out liquidity, raided this high, right? But this is not an engulfing candle, okay? It didn't engulf here. But now if you see, the move is not really that impulsive, right? But to some extent it is, right? But it's not really impulsive, but it still broke our what? Our structure. So you can as well have just two, but the major one is that it must break structure and the move must be impulsive. Okay. Now let's look at this. Look at this. It didn't really rate the high. It didn't take out liquidity. It just what? Broke our structure. And it's not really engulfed as well. Let's see if we can check for other pairs. Let's see if we can check for other pairs. Okay. Now let's see. Okay. Okay, look at this. It engulfed, right? But it didn't take out liquidity. Engulf broke structure, but it didn't take out liquidity. Here too, what? It engulfed, right? And broke structure. The move is what? Impulsive as well. Okay. Now look at this. It raided this high, reached this high too, took out liquidity here. Move is what? Impulsive, but there's no engulfing, right? So we can keep searching and to find our good, it must contain the four characteristics to find our good, bullish or bearish. Okay. So if we have the characteristics of this bullish, that is this, you indirectly know that it will be opposite, right? When we are looking for that of when we are looking for that of bearish. So bullish and bearish, you have to maintain what the characteristic fair value liquidity gap, right? LG, impulsive move, break in market structure, and engulfing, right? So the more you practice to check these things from the chart, right, the better it will be. Look at this, it engulf, right? It engulf here, right? This is an engulfing. The green before the impulsive move, it broke structure, right? But it didn't take out liquidity. Okay. So okay, let's look at this. Look at this. This is a very nice example. Okay. What happened here? It took out liquidity here, took out this high, right? engulf the candle. Look at the green. This is a bearish order block. The green candle before the impulsive move. The impulsive move was broke structure. So let's see. Took out liquidity, right? Took out this high, took out this high, upward, okay? Engulfed this candle, the green candle, right? It engulfed this candle, right? And it broke our structure here, okay? So these are the zones. So these are the zones. So you can do same thing in all the charts. You just look for it. Just look for it, right? And look at this. This is also a good one, right? So this is on a daily. If you reduce it on the lower time frame, you see that there's a clear structure here. From daily, it's not really clear, right? But it broke structure. Look at the move. There's a structure here. Broke the structure. Okay, raided all these highs. Raided this one too, right? Raided the high. Engulfed. Okay, closed below the green candle. Now look at this. Raided the high, right? Engulfed and broke structure. Raided the high. Took out liquidity. Engulfed the last green candle. Broke structure. Okay. Now, if you mark the green candle, you see that the market came back, reversed from the exact position, came down, went up again, hit that same position, came down before going up. Okay. So the first one is what we have seen, the order block. So you can actually be marking your order blocks, and you just keep practicing with it. The more you practice, the more it gets visible in the market. Okay. Now you do that also in line. Okay, look at this that we marked as well. If you stretch it, you see that the market actually reversed from that point, okay, and went down. But here it didn't take out liquidity. It just was created an engulf, impulsive that broke structure, came back with this and went down. So now if you can do that now, if you catch the if you catch it from here, you ride it to this previous low, you see that it's a good number of pips. Okay. So with the combination of our market structure and the rejection point, it's a very good combination. You will see that you will actually do massively well. Okay. So now that is that for the what? The other blocks. So these are the criteria of a bullish and bearish order block. So you for look out for these criteria when you want to choose the order block. What? A good order block must take out liquidity, have an impulsive move, must break structure, and it must engulf. But like I said, you can do without the liquidity and the engulfing. You can have like a railroad track there, but it must be impulsive and it must break market structure. So these two you can't do without. It must be impulsive and break structure. You understand? But for a very good bullish or bearish order block, it must contain what? The four of them. Okay? You understand that? Now, for the fair value gap, what is a fair value gap? Now, if you look at the market, you will know that it involves two participants, what? The buyers and the sellers. Okay? The market always contain two participants, which is the buyers and the sellers. So now a fair value gap refers to only one participant in the market. Do you understand? So if it is a bearish, it's only sellers that are there. There's no buyers. If it is a bullish, it's only buyers that are there. There's no what? There's no sellers. So only one participant. You cannot be a seller you can't say a seller in a bullish fair value gap. Okay? You only see buyers there. Do you understand? Do you understand? So let's go to the chart to have an example of a fair value gap. A fair value gap, okay, let me remove this. Now, this is an example. A fair value gap consists of three candles actually. This first one, you must have three candles. This first one, this second one, and this third one. Okay? So the tip of this first one to the top of this third one, that's how you mark it. That's how you, you identify it. Okay? The last tip of this first candle to the third candle tip, the third candle tip to this first candle. Okay? So this is the fair value gap. This is also another point where market reject from. Okay? It is another point where market will reject from. So now, but you in a move, you can have an order block and a fair value gap. So what will now determine which point where the market will reverse from? Is it the fair value gap or the order block? Now we will get to that, but we are actually trying to what? Identify what? The fair value gap. Now, if you look at this again, you agree with me that there's a fair value gap here, right? There's a fair value gap here. This green candle, this one, and this third one, the tip of the green than the tip of the third. Okay, there's a fair value gap, this big gap. Now the market came down, came and refilled this gap till the top of what? This is our order block, this is our bearish order block before it reversed, right? So there's a gap here. I can also see a gap here. I know you too, you can also be trying to look for the gap too, even before I see it. Now there's a gap here, right? There's a gap here too, fair value gap, okay? Now there's also a gap here, okay? Remember I said what? Three candles. Sorry, I'm trying to adjust it. The tip of this black one to the tip of this other one, there's a gap here. So market came back, refilled it, went up a little. Okay? Now look at a very big gap here. Now there's a big gap here, right? Fair value gap. Okay? So you can go on and on and on to identify what? Fair value gaps. Now we will get to a point where I will show us the particular place to actually watch out for this order block, fair value gap, or king gold. Okay? But it will not be in this course, yeah. I'm just showing us the rejection zones. Now look at fair value gap, okay? Fair value gap. Don't mind my drawing. Fair value gap. Very beautiful, okay? The tip of this candle plus the big body and the tip of this. Now you see market broke the structure. Now market took out liquidity, broke structure, came and reverse and filled our fair value gap. I see, you see that the market rejects from what from the fair value gap, okay? Fill the fair value gap and reject downwards. You see that is a very beautiful trade. If you can catch this. Now after reversing, now you see the market came back again to that zone, giving an opportunity again to what enter after coming down, entered again the fair value gap. And the market always respects this rejection zone. So your ability to actually identify this rejection zone is key. If you can identify these rejection zones in the chart, I'm telling you that it will improve your trading strategy very, very well. Okay, so you can go ahead and keep practicing to identify what all these fair value gaps. You can keep practicing, but these are what now. This is a fair value gap here too. So you see that it's not really hard to identify. Okay, very easy. The tip of this one to the tip of this. Now you see market came, rejected here and went down. Came and filled the fair value gap and went down. Okay, so a fair value gap is, oh, I just love identifying these things. You okay? Now look at look at. Is it not amazing? Is it not amazing you? Look, the tip of this to the tip of this, the fair value gap. Market after going up, he tried to reach it, he didn't reach. Tried to till he came back and refilled what this fair value gap. You can see it. Refill the fair value gap and reject from. So these are the zones market always what reject from. Now, oh my God, look at fair value gap. Look at it. Look at look at. Okay, look at one here. Okay, look at another one here. Okay, look at another one here. Filled it up and went down. Okay, so what about the last one? We have the last one as well. A king OB, king order block. Now, a king order block is like this. The candle must be strong too, okay? Okay, but the wick will not be long. Oh. The wick will not be long, okay? Okay, the wick will not be long. So, sorry, permit me. I'm not. My line is not straight. So, a king order block is the combination of just two candles. Remember, fair value gap is three candles, but this is what just two candles. And you will take what the tip of this candle and the bottom of this candle. You draw it out, draw it out with your box. Okay, the tip of this to the tip of this. So it must be two candles that has what momentum, strong candles. Okay, so their tip, you take it just two candles. Don't mistake it with Don't mistake it with the fair value gap, okay? So let's see if we can, excuse me, let's see if we can identify, let's look for our king. Very good. I can see a king here. This big candle and this momentum candle too. Okay? So take you take it from here. So you take it, the tip and the tip, two candles. You take it and you draw it. Okay? So this is one, right? So let's look for it. Let's look for it. Now let's look at this one, but it's long, right? It's very long. So we'll not use it. It's very long. Now look. Let's look. We have, oh okay, no. This is not it. Now we have one here. That's mine. We have one here. You can see it. Oh, sorry, permit my drawing. You can see it. The two candles have momentum. This black and this black. It has momentum. So the king market after coming down, it came back, retested the king order block and what? Went down. So if you can catch it, now if you can catch it from this king and you ride it down to the previous low, is the previous low. You draw, if you draw a line, you write it down to this previous low. Like what I'm saying is, I mean, like your take profit, you set it here and you write it down here. You see the thing, you always target the previous low, okay? From our market structure, if you don't understand, watch the market structure video. So you target it from this low as your take profit. So if you can catch this king order block, it came back, retest, see exact point, immediately hit it, it reversed from it. So from that point, the target here, you see how you'll be in good pips. Okay, so this is an example of a king order block. So just check it out. The tip of this, just two candles having momentum, not just weak candles, or the body must be full like this, having momentum. Okay, then the wick will not be long, it will be short. Okay, so that is that for what? A king order block. Now, if you can apply these three very well, okay, let's look for more examples. A king order block. Look at a king here. Is look at a king. Two momentum candles, the tip and the tip here. Okay. Now, after coming down, you see market retested the king immediately and what? Went down. A lot of people actually like king order block. Now, if you check this king order block in a lower time frame, you will see that it's a strong order block. It's an either you see that it's another block that is there if you reduce it. So if you can catch it from here, if you can catch the move from here, from this king, you target what? Previous low, which is this one. You see, it's a good number of pips. Before you what? So you hit here, you write down, target this low. Before you now maybe extend it. Okay, or If you want to target this low, you can target this fair value gap. You see they're in the same zone. So if you see a fair value gap down, you can target, but mostly it's good to target like just previous low. Because why I say target fair value guys? Because most times when market gets there, it rejects, right? It's part of the rejection. So it hits the king OB, went down. You see, so it always respects our rejection zones, which is our order block, fair value gap, and the king OB. So I will encourage us to practice more with our chart. Practice more with our chart very well so that you get used to these things and you'll be good to go. Okay? Just practice it and you'll be perfect with it. Subsequently, we'll talk more on where to locate these things. How do we expect it? We'll have to which one is liable to hold, which one. Do you understand? So follow our channel, subscribe, comment, ask questions anywhere you don't understand. Okay? Subscribe, turn up the notification bell for more of these our videos. Okay? You are welcome. You are welcome to the channel. So I don't want the video to be long. I hope to see us next time for our next lecture. So please just practice it. You can switch from different time frame as well. Just switch different time frames. Look for it so that you get conversant with it. See, taking out the liquidity, engulf, right? Okay, it didn't really engulf because the last green candle is like a railroad track, it didn't engulf. But broke structure, look at the fair value gap, the big gap here, right? Look at on that big gap here. So just practice so that we'll see in our next lecture. Thank you so much.